Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today, with the most recent 13F filings, we saw Michael Burry had accumulated some Google shares. I want to look at Google as a company because it's something I've kind of admired for a while, and haven't invested in them yet. Maybe now's the time.
Yeah, definitely an interesting company because there's all this stuff going on. If you like this kind of entertaining stock market content, just give us a like and subscribe. We will get started. Oh no. Don't look at Vinny. No one look at Vinny. He's not there. It's invisible.
Guys, trade stocks.
And now we're here.
I love it. I love it. I literally just got off quarantine. I had the virus, so you would think I'm the one with the COVID brain, but no. Apparently it's Dylan.
It's been a long day yesterday.
Yeah, I can only begin to imagine. So this is most recent 13F filing by Michael Burry. I did a brief video on that. Most kind of notable thing was this whole Apple bearish position, but he did actually accumulate some shares in Google. Yeah, kind of notable. It's not the first time he's owned Google, but he did buy some in the first quarter of this year.
I would say I think the two sexiest buys are Facebook is up there. Facebook is more for me, but Google's probably my top five.
Okay, I already own some Facebook, and I'm okay with buying some more. But Google, I want to look at a little bit more. Now, what do you think of the timing of his buying in the first quarter of 2021?
What is the date the split goes through?
March 31st. Oh, I'm
Okay.
sorry. The date the split goes through is like June 15th.
June 15th?
June 15th? Yeah.
So like a month from now?
Yeah.
Yeah, I mean, I would assume we're going to get a run up here in Google. Just looking at now, granted, a split has literally nothing to do and shouldn't cause a run up, but for some reason it does. Like
Yeah.
Nvidia, Apple, Tesla, take your pick.
Yeah, agreed. No, the reason why I kind of commented on that is that it's come down quite a bit in this quarter so far.
Yes, it
The
has.
first quarter ended, it was like $2,700 a share, and you're talking about now 2,200, just a little bit under that. So he's upside down in his position for sure if he still holds it.
Yeah. No,
Yeah.
he's definitely upside down.
Yeah, we're gonna look at the chart a little bit later on too, because I kind of want to give get Dylan a weigh in terms of like when you think it'll hesitate and what sort of kind of stutter points you can get in buying opportunities. But when's the last time you saw a revenue compounding kind of graph that was like this sexy?
AMD.
Yeah. Okay.
Yeah.
All right. It's been a little bit since I looked at an AMD graph, but this is very Apple-esque in my opinion. I just love it, just like that consistent quarter-on-quarter clockwork, just like growth, baby, growth.
Yeah, AMD is kind of unfair because you have to only look at like the last 4 years.
And they still only control like 4% of the market, as opposed
Yeah.
to Google, which controls a huge portion of their market.
Yeah.
But it's
No, I
a
agree.
topic for another time. And the same thing. This is a graph that AMD can't even come close to in terms of the net income consistency. Yeah, I know. Look at that. Going back over here 12 years, and they were in positive territory. That's ridiculous.
That is pretty absurd. Yes.
Yeah, this is one of those companies that like, I admire them in so many ways. I have never had an opportunity where I felt like the number kind of lined up, and I was in a position to buy it. Have you ever heard Warren Buffett talk about Google?
No, I have not. That'd be interesting.
Yeah,
though.
he actually considers it one of the greatest like whiffs of his career.
Oh.
He said that they saw the power of the advertising dollar spend on through Geico actually on Google in terms of Google ad rates and what they were getting back for what they were doing. And he's like, I didn't buy the company. He goes, I just couldn't make sense from it from a an investment side of it, but he considers it something that he should have seen, but he didn't.
Okay.
And this is another chart that's pretty sexy to me. Shares outstanding, and you notice this like trend here. It's just starting to taper down here.
Yeah.
Good
No,
sign,
it
right?
looks like they're doing continuous share buybacks.
Yeah. I mean, they're at the point now where I think you're going to start to see a bit of an inflection. They've been doing it for a couple of years, but share buybacks tend to have this kind of like rolling snowball effect. Whereas they continue to generate, they have massive free cash flow generation. They're putting it to work by buying back shares. They recently announced a $70 billion share repurchase program, right? Which allows them to buy, I think, 3 or 4% of the total outstanding float back. And they're buying back at a pretty consistent pace of about $13 billion in share per quarter at the current time. So that's a pretty sizable return to investors, right? You're talking about $60 billion, say, at least a year, something in that ballpark.
Now, I have not looked at this presentation.
Okay.
Are you going to look at the legislative recent situation?
Yeah, that's coming up actually pretty shortly. That
Got it.
is the when you're a company like Google and you are literally so successful, the kind of natural opposition point is now no longer other companies. It really has moved into territory where their natural opposition is now governments.
Right.
Makes sense. Um, Now, if we look at historical valuation metrics here, so I pulled up PE, PS, and price to free cash flow here. You look at PE, we're down kind of along like the lowest points we've seen it in 7 years, somewhere in the ballpark, right? Hitting 20. We look at price to sales, not quite the lowest. We're a little bit under 6. They've actually been as low as about 5. So they could go a little bit lower in price to sales, but they're on the lower end of where they've
Which
traded in terms of price to sales.
they could hit because it doesn't matter how good a stock is doing. If the whole market's going down, it just brings everything down.
Yeah, exactly. That's why I'm excited. This is a company that I love so many things about the business here, and I just want to get into the right price, and slowly build my position. Right, and then price to free cash flow. Also, another you want to actually slide yourself over there so you can actually see how low it is at. In fact,
Oh yeah.
yeah, pretty low. They've been lower one other time in the last several years.
Nice.
Yeah. And price of sales is not my favorite price multiple metric. It's better for kind of early stage businesses. When you get to the later stage, I like price of free cash flow. It's a much better kind of metric, at least in my opinion. So this is what I think you were hinting at: this new bipartisan bill that would force Google to break up its ad business. Right?
Yes.
Basically, from my understanding, is the way it works right now is that Google represents both the ad buyers and ad sellers, and owns the marketplace that acts as the middleman. So if you processed any $20 billion or more transactions of any of those, you would have to have that be a separate business. So if this legislation were to pass, and it does have bipartisan support, which is rare. It's something that both Republicans and Democrats agree on, which is really, frankly, not much. So it's got a possibility of making its way through, the government, right? If they actually both agree on something, maybe it'll actually happen. They got out of the mud. But yeah, I know, right? It'd be over $20 billion. Since they process over $20 billion in transactions, they would have to divest the 2 other business segments out of those 3. Right? That's what it would come down to.
Okay.
Now that could be done through a spinoff. And as a Google shareholder pre-spinoff, you would still get a piece of the other business. Now you would certainly contract margins potentially with this. So I actually, when I do my kind of valuation here in a minute, you're going to see I did bring down the margins just a little bit, just in case that there is a little bit more competition in a post-spinoff advertising breakup era. Right?
Got it.
Yeah, but the fact is, Google has such a head start. It wouldn't matter. It would take other companies years to try to catch up with them in that realm. Yeah, Morningstar has them rated as a wide moat company, in case you were unaware, which is not a lot of companies get that. Even Apple doesn't have a wide moat. Okay.
Yeah, they also rank never mind.
All right. So this is the most recent quarterly report for Google Alphabet here as parent. Pretty solid numbers, right? 23% year-over-year growth. When they had this massive growth due to the pandemic, this pull forward of growth, they're still growing now. That's impressive.
That's pretty wild because a lot of companies had a lot of contraction because you had so much growth in 2020, and then the 2021 numbers came out. And they're like, oof, not that great. They're still killing it.
Yeah, they are still killing it. Arguably so. Yeah, we've seen a lot of retail companies. We're talking about, Target is like 3-4% over last year. Same thing with Walmart. I'm trying to remember what was Facebook year over year. I can't remember. I want to say it was like 18% or somewhere in that ballpark. A little bit lower than Google,
impressive.
But still good. Yeah. Still able to grow revenue year over year. Now, they kind of got dinged a little bit, and the people were unhappy because the earnings per share missed and was down year over year. But earnings per share are going to fluctuate when you're talking about this other expense income. This wasn't related to the core business. This was an investment write down that ultimately became the big swing there in terms of their profitability. So it's not something you can ding them for long term, at least in my opinion.
Do we know what the investment was?
I'm not sure. I'm not honestly sure what the actual investment was, but
it wasn't Rivian, right? like Amazon did or whatever it was.
Yeah, I know. Right? That was Amazon's problem. Unfortunately, Buffett will talk about this, but he's not a big fan of the whole way they're required to report their kind of profits or losses on a quarterly basis based upon their underlying portfolio of stocks.
Right.
So it's really important to separate out the core business. Yes, how those investments pan out matters in terms of like the company's ability to allocate capital, but what really matters at the end of the day is how's that core business growing, and the core business is growing fantastically. All right.
Got it.
Yeah, this is Google search, 32 billion up to almost 40 billion. Google YouTube ads here, actually, you're watching this on YouTube. I kind of disappointed the investors, but it was still pretty solid growth, but it was a little bit less than they expected. All right.
That's a lot.
It's so funny when I listen to people talk about how they're having to compete with TikTok, and they're talking about YouTube Shorts and how that's growing, this sort of stuff. I honestly don't care. Like YouTube Shorts, Instagram Reels, and TikTok are all like a certain kind of content. Sorry, excuse me. And it's just funny, right? Like that's what that content's for, right? It makes you laugh.
Yeah. Also, they did a breakdown of people who like released a video on TikTok. TikTok. I'm old now. And then compared it to YouTube, and you would have made like 80 times more money if you put on YouTube versus TikTok, because they don't really give money to the patrons or the people that film the videos.
Yeah, they don't monetize the platform as well. So the thing that I kind of struggle with is that when you're looking at YouTube, you see this kind of I see it as a very different product. This is more a medium to long form video content platform. The short form ones are good for like, oh, ha ha ha, that was funny, like they made me laugh. But that's not the kind of stuff that people will bring back as like a well, right? People look at to me, I look at YouTube as like this wealth of knowledge. It's just like this online repository where, like, say I want to buy a TV. Guess what? I bought a new TV recently. I watched probably 10 YouTube videos or reviews of that TV before I decided to make the purchase. And and that's not unique to me. Like even younger folks that are those late teens and early 20s still use YouTube as like their kind of resource in evaluating products. And I think as they continue to age the demographic, they're going to use YouTube more and more. TikTok is got its niche, but I don't think their niche is going to be a profitable long-term driver. So I think Instagram Reels and YouTube Shorts are kind of wasting time and energy trying to compete with them, at least in my opinion.
I could not agree more. Literally, anytime I have anything complicated, I fix my car, I fix my house, everything is based off of YouTube. I literally just do Instagram for like funny dog videos.
Yeah, funny dog videos or wife videos. Those are funny too, because like they're all crazy. And the other segment I wanted to actually highlight here is Google Cloud. Google Cloud grew at 44% year over year. That's quite impressive growth.
Disgusting.
Yeah, unfortunately, if you look down bottom here, it's still negative in terms of the actual operating income. Which is funny. I before I did this video, I unfortunately ran out of time. I wanted to look and see are any of them cash flow positive? Like I know Alibaba was like barely cash flow positive. I was curious what like AWS is in terms of cash flow.
I'm going to say AWS is positive. I don't know that for sure, but I can look it up. Hold on.
I suspect you're right. I'm just kind of curious because tremendous growth, but they all are continuing to lose money on them because they're having to build out more and more infrastructure, which is I guess the name of the game. It's just I'm curious what the inflection point becomes because growth is great, but I also want to see it eventually turn into a cash flow positive thing. But either way, it will eventually. Other bets is they're kind of like grab bag unit. There's one section I wanted to discuss in there, and Dylan actually is probably going to hate me when I bring this up because I talked to him a little bit about it briefly. Now, this right here is the the revenue by quarter, most recent quarter. Mostly search is what this all comes down to. The Google Services unit is where search is located. Cloud, other bets, portions of it, but not that big a deal. And as far as the profits go, it's all Google Services. It's all that kind of ad revenue. So this is the other thing I wanted to bring up that was funny. So one of those other bets units is this company called Waymo. It used to be called Google's autonomous driving unit. And so this is actually from California DMV, and this is the number of miles per disengagement for their full self-driving capability. Almost 30,000 miles, which is respectable, right? Tesla's not on this list, unfortunately. There was another chart I had seen and I couldn't find it. And according to that chart, Tesla was averaging about 3 miles per disengagement. I found this poll which kind of reflected it. It was a similar thing. This is actual Tesla owners reporting this data. Very, very small study too, as far as the data set. But consistent with what that other number was, saying that there was someone's 1 to 5 mile range where they were seeing their average disengagement rate. So not even in the same universe as the Waymo product. So the Waymo product, I know you're in Arizona. I don't know if you've ever encountered them. Chandler, Arizona. They're
everywhere.
Yeah, they are. So you could actually pay for it now, and it's autonomous. There's no driver in the vehicles in Arizona.
I'll have to pay attention. Everyone I've seen, there's a guy in the passenger just in case. But I'd have to look.
It's the first one where they're doing completely autonomous now at this point. They've been there for quite a while, but I think it's about $1 a mile is what they charge, or $1 a minute. It's like a 30 square mile area around Chandler, Arizona, where they are capable of driving autonomously. They've actually started their second city, which is San Francisco, California. That one is still using driver, a supervising driver in the driver's seat, monitoring it, but they actually have started a whole fleet of these Waymo vehicles on the streets there. They're not yet charging for rides in San Francisco. It's still that's why they're losing money.
Have you seen one?
I have not. I mean, I'm an East Coast guy, so technology takes forever to get over here.
There's really weird. They're like these spinning fans on both sides and this big hub on top. It looks really, really odd. The only thing that I will... Oh, there you go. Yeah. The only thing I'll say is I don't think it's fair to put Tesla in this argument because Tesla's not trying to see length of time. Where this is trying to see how many miles can we go before we have an issue. Whereas Teslas are just people owning the car and taking a mile to the gas station, then kicking in just in case. There's not the same variables for Waymo versus Tesla. Once again,
Understood.
I'm not saying Tesla's a buy right now. It's not. I'm just no. Everyone's gonna say
yeah. No, I always understand that there's a secondary side. And Musk has talked about how he did not like LiDAR, which is the system that Waymo is actually using here. Definitely not the most attractive vehicles in the world when you do this. I will give Elon credit for that. The Tesla makes a far more attractive vehicle than Waymo does.
Yeah, not that they're 100%. Yes, these are weird looking.
Yeah, but function comes before form, at least in my opinion, because I'm not an artist. But yeah, so their Other Bets unit, I think, has tremendous potential. In fact, I would tell you that the Other Bets unit, I think, at Google has more potential, or not more potential, a higher likelihood of success, in my opinion, than Facebook's kind of meta platform does.
Okay.
Yeah.
All right. Well, yeah, Meta is still kind of... You mean Meta like Metaverse?
The Metaverse, yeah, that's what I mean. I think Metaverse is a longer kind of aspirational reach than I think Waymo is with the actual autonomous driving vehicles. You don't need these fleets to be everywhere. Literally, Uber that generates a huge portion of the profit just from I think it was the 10 or 20 top cities. So that's all they really would need to capture market wise. Yeah. I think there's a far higher likelihood of Waymo bringing a autonomous taxi fleet to market than I do Tesla, Mr. Musk, if you will.
I don't think they're trying to do
that. Yeah, they've talked about it a few times. You can generate $30,000 a year by just letting your vehicle drive people around all day while you're at work. You didn't know that? When Musk said it was irresponsible to buy anything but a Tesla.
Yeah, it's a ridiculous thing to say.
Yeah. So, all right. I actually use the software here from Everything Money. I don't know if you've ever seen this before, but it's a good software. Kind of build up a basic DCF. It gives you the last 2 years' performance in terms of revenue growth. So they've averaged almost 20% for the last 10 years, 23% over the last 5, and then 37% for the last year, which is pretty ridiculous. Gives you the profit margins, free cash flow margins. It tells you what the current PE is and what the price of free cash flow is. So what I basically did here is I threw in some numbers: 5, 10, and 15%. Given them a haircut compared to the previous decade for sure. 10% being the midpoint, meaning we're unlikely to see this high 20% or so range for very much longer. Is what this is kind of assuming. I did bring down the profit margin here. Like you said, they hovered around 22.5 was like their average for the last 10 years. I used 22 as my midpoint. Like I was saying, kind of more competition probably with the whole, divestiture or breakup of potentially of the Google ad business. Same thing with the free cash flow margin. P, I kind of gave them a high, teen multiple on average is kind of what I figured here. 18-20 is where I feel pretty comfortable owning a company. I never, people talk about historical average of 15p. In reality, 20 has been the number for the last like 40 years. So that's kind of where I use as my midpoint. But I want a slight discount to that. And I did 15% average annual return, which is a pretty aggressive number, right? 15% per year. So that right there gives me, these are the kind of the buy range prices for Google, depending on what you think you can do. So if you're looking at the mid range here, 10% revenue growth, which is very achievable, slight contraction of profit and free cash flow, PE to come down still a little bit from where they are currently, but like still in a very reasonable realm, and aggressively at 15%. You buy this all day long at about like $1,700 a share.
Okay.
Yeah. It's like 2,100 right now, 21 and some change. So this is my plan. I'm going to buy one share pre-split now. All right, I'm starting a little bit early. Yes, I know I started to do early with Facebook too. That's basically what I'm planning on doing here. If it drops below 2,000, I will pick up another share. Ideally, I'd like to have a full position built about right around $1,600 a share. If it continues to downtrend, which I'm really hoping it does, then that's what I'm looking to build out. Ideally, I want 100 shares post split is what I'm trying to accumulate here, so that I can then sell my covered calls against it.
What was the split again?
I want to say it's June 15th.
No, is it like 5-1 or
20-1?
20-1. Okay.
Yeah, so it'd be somewhere around $10,000 position, somewhere in that ballpark. Okay. Is what I'd be looking to accumulate over the next few months, hopefully. But I want to have you bring up the chart real quick so you can kind of take a peek at it. From my eye, it looked like.
So I'm really, really zoomed out to June 20. But if you look at these two blue lines, right? These two blue lines, these are about $50 to $60 apart. So when stocks go up, market makers make money on transaction volume. So more volume, more money they make. No money was made between 1950 and 2000. So I would guess that it would easily retest that. And then very little money was made between 2150 and 2200. We are literally at right there. I would guess that we are going to hesitate for quite a while. Let me zoom in here. Oh, that's really zoomed in. So we are chilling in that zone that I just specified, but I would assume maybe we're going to hang out here for a little bit, get as many transactions as we can, and then drop down to this region. My low end, which is funny because I did this before, you just said your $1,600 thing. My low end is going to be $1,600. What is this? Oh, 1,800. Sorry, I don't think it's going below 1,800. Yeah.
But that's realistically where I'd like to have a full position built, is in that ballpark. Try not to be too early, like I was a little bit with Meta, but be a little bit patient. But I want to start building it now because it makes sense. I think at this point for a 15% return for assuming it gets at least 10% per year in revenue growth.
I think
achievable.
Your next ad is 1950 to 2000. It's going to hesitate. For some reason, it freaks out on whole numbers. All stocks do. So it's going to hold at 2000 level for a while. And then there's been very little transactions between 1950 and 2000. So I feel like that'd be a good price.
Yeah. That's my inkling, at least for the first couple shares worth, I guess.
Right. Or 195 to 200 post split, I guess.
Yeah, I know that would be another interesting twist. The kind of thing I'm curious about too is like Burry's in and out of these things much faster than I would anticipate. But from my standpoint, I'm planning to make this like a multi-year thing, so that's why
Same.
I'm willing to be patient in my building of it.
Yep. Completely agree.
Yeah. Well, let us know, and I'd love to hear your comments down below.
All right, guys. Have a good one.